Hello and welcome to the Reorg, where we dive into the Satoshi Nakamoto Institute archives and re-examine old ideas after years of accumulated proof of work. This is your host, Michael Goldstein, also known as Bitstein, and joining me is my co-host, Pierre Rochard. Pierre, are you doing well?
I am doing well. How are you?
I'm doing well as well. You know, typical for us. Things are just, continue to excite me in Bitcoin. It's the current day that we're recording this, Bitcoin remains in the 80s, but every day there's new news coming out that just sort of help, I think, bolster and illustrate the fundamentals. And, the latest watching GameStop get into the Bitcoin game, which is certainly entertaining from even just a meme aspect, and maybe we can get into that later, how that relates to our current the article we're going to discuss. But
it's funny too, because I saw somebody say GameStop getting into Bitcoin is bad for Bitcoin's reputation, which is a kind of argument that we've heard for the past decade. But it's just funny that at the beginning it was like, drug dealers using Bitcoin is bad for Bitcoin.
Terrorists, whatever. Now it's just
like meme stocks.
Yeah, it's because a zombie company. Yeah, that's it's the end of Bitcoin. So, so the way that this relates, I'll get into it. So we've been going through the S&I mempool crash course in Bitcoin political economy, going through kind of the 2013 to 2015 vision and re-examining it. And we worked through last time, the argument for hoarding Bitcoin, why people hoard and why hoarding's a good thing, and why it actually is sort of the source of Bitcoin value. And next, we're reading one called Bitcoin's Compound Rewards. And this one's a bit more of a minor article. It wasn't one that was ever, I don't think it got too much attention when it came out. And it's a simple article, but I think it has some key points that are certainly worth highlighting and why it's part of the crash course. So for context, this came out October 25th, 2014. The price was about $345.81. So price was still down after quite the exciting time. So earlier in the year. So this was definitely in a sort of bear market vibe where, anyone who's been in Bitcoin long enough has experienced the bear market, and suddenly, it's the new round of this is why Bitcoin is going to die. That's why, people are always coming up with, why Bitcoin's at its end. But this kind of looks at some of the incentives of what makes Bitcoin so special in terms of its upside potential. So it's a short article, so I'm going to just go ahead and read through it, and then we'll hop into discussing the ideas here. If there were a set of rules such that the people who followed them were rewarded in a way that increased with the total number of followers, then each person involved has the incentive to bring more in, and furthermore can expect everyone else to do the same. Regardless of any other merits the rules have, the mere prospect of rewards will make success more likely for them. I suggest that Bitcoin works like this. Yes, Bitcoin is great as a payment system and so on, but I think its value as an investment prospect should be taken more seriously. If Bitcoin succeeds, then obviously its early adopters will benefit enormously. And the earlier you buy in, the more you benefit. This prospect, I believe, does a lot to explain Bitcoin's extraordinary success even against the overwhelming competition of the dollar. Most people are somewhat mystified when they first hear about Bitcoin because they can already buy anything they want with dollars. Bitcoin's value proposition depends upon a lot of people actually buying Bitcoins, despite the fact that today there is not much demand for them. Yes, I know that you can buy pretty much anything with Bitcoins now, but there is still a big difference between Bitcoins and dollars. If you run around with a suitcase full of dollars, you can get anyone to do anything for you. With Bitcoins, you have to find the right person to take them. Dollars clearly make more sense as a currency right now because they enjoy a much larger network. And yet, Bitcoin continues to defy skepticism and grow. Despite Bitcoin's performance over the last 6 months, it shows phenomenal returns over the past year. Furthermore, Bitcoin's transaction volume has nearly returned to the level it was at the peak of the last mania. Over its 5-year history, Bitcoin has grown exponentially, and people have continued to dive in despite how distant its success may have appeared. By contrast, nobody benefits from holding dollars. Dollars benefit the people creating them, not the ones saving in them. Hence, there is a relatively small group of people with the incentive to promote dollars as a payment system, consisting of the government banking cartel. The group with the incentive to promote Bitcoin, on the other hand, is relatively large. It consists of everyone else, even those who have not bought Bitcoins yet. Despite the diversity of people involved in Bitcoin, they have a unified incentive to make Bitcoin succeed. Meanwhile, there is no similar incentive for people to cooperate to save the dollar. It is therefore not so difficult to see why Bitcoin should succeed despite its disadvantages. Bitcoin has been criticized for being deflationary due to the fact that it has a fixed supply. However, Bitcoin's fixed supply is the very reason that its holders have the incentive to stick together and fight to win. Without a fixed supply, Bitcoin would not present the same potential benefits to early adopters and would therefore have lower odds of success. Thus, regardless of whether deflation is good or bad for society, a fixed money supply is individually beneficial, and it is therefore a crucial part of Bitcoin's success. Bitcoin has also been criticized as a kind of Ponzi scheme because of the way it benefits early adopters. However, although it is true that Ponzi schemes benefit early adopters, not everything which benefits early adopters is a Ponzi scheme. The difference between Bitcoin and a Ponzi scheme is that in a Ponzi scheme, the early adopters benefit by cashing out. With Bitcoin, there is no reason ever to cash out. As long as the dollar still exists, then Bitcoin has prospects from further growth. Once Bitcoin reaches the point that it can grow no more, there will be nothing left to cash out to. It is better to say that Bitcoin holders have already cashed out of the dollar, that is. So I think, the main point of this is that what really makes Bitcoin special and stand out, obviously we can talk about the sort of security aspects, the sort of financial security in terms like sovereignty and such, of being able to hold your own keys and all of that. But sort of the key ingredient to all of that allows Bitcoin to grow from this little cute monster in this image at the top all the way into a giant Godzilla that destroys all of its competition. The reason that's able to happen is because of the, as we like to say, the number go up technology, the NGU technology, because Bitcoin has such upside potential. And, right now the dollar is the most liquid currency in the world. And because of that, we even see a lot of continued dollarization in the global economy. But even with full dollarization of the global economy, there's only so much growth that would occur. And like he's saying, you have like the Cantillon effect, which encourages the money printers. They very much like additional dollars. But for people generally, they don't really have reason to be holding on to the thing. So that liquidity is there by virtue of the fact that it's liquid, not because there's necessarily a future expectation of the dollar as a network becoming better, so to speak, beyond the economy itself. Whereas Bitcoin, even today, when it's been up to over $2 trillion, that's still a complete, it's a tiny drop in the bucket of global finance. And so getting into it, there is a real potential for number go up. And in the long run, you don't always have that drag of inflation as money printers continue to print money. If you had full dollarization of the global economy, that just means that they have more people to milk when they print new dollars. But they're going to continue to print new dollars. They're not going to get to everyone. It's like, oh, okay, now we can stop. In fact, the ideological basis that they use for dollar printing is the idea that you need to grow the supply in order to keep up with the growing economy. So they have no ideological reason to ever stop. I would consider that more of a rationalization. Really, they just want the benefits. But they're not going to stop. Whereas Bitcoin can't grow, so to speak, in terms of the supply. There is a fixed supply schedule. And so everyone in the world who has a desire to save for the future has to keep that in mind. And Bitcoin is the thing that, like I said, 2 trillion is nothing. And so, you like to say, and I think some people think it's merely just a meme, and sure, it can be kind of fun and cheeky, but we really are so early.
Yep, we are. And I think that, it's funny that the critics do actually still to this day bring this up of essentially, we're pumping our own bags. And the greatest example, I saw this recently, there's this guy in the UK, he's advocating for a wealth tax. And so he's, very much trying to pretend to be a populist and say, so he's doing the podcast circuit. Somebody asked him about Bitcoin and he said, oh, Bitcoin, obviously it's to enrich Satoshi Nakamoto, which is really funny because Satoshi has not sold a single Satoshi to our knowledge. And then he says that, well, Satoshi, what he would do if he were Satoshi is that he would bribe the government to acquire a strategic reserve and pump his bags, basically implying that Satoshi has bribed Donald Trump.
Despite no coins moving, to be associated with him.
Yeah. So, look, I like the idea that somehow Satoshi's in touch with Donald Trump. That would be really poetic. But I think that what he misses is kind of the difference between a conspiracy theory and an alignment of incentives, meaning that it doesn't necessitate Satoshi doing it. It's because Bitcoin's decentralized. And so you have lots of people who have exposure to Bitcoin, whether it's even the Treasury of the Secretary, he disclosed that he held Bitcoin. Howard Lutnick, the Treasury or the Commerce Secretary, held Bitcoin. His kids. I just saw Eric Trump is joining Metaplanet as an advisor. It's a Bitcoin treasury company. And so clearly what we're seeing is that I consider it the democratization of the Cantillon effect, meaning that the Cantillon effect, normally it goes to the monopolist who has the printing press. And so any kind of increase in purchasing power goes through that process. Whereas with Bitcoin, the increase in purchasing power gets distributed to all the holders. And so that's really, to Daniel's point, a great way to incentivize evangelizing Bitcoin and, growing the pyramid, which, obviously sounds negative until you realize that everything's a pyramid. And it's also the most stable structure. The Egyptians' pyramids, it's still standing thousands of years later.
Right. Yeah, well, I think that's a good point about the Cantillon effect. I think maybe some economists would argue with that particular framing or something.
Well, it's metaphorical, right? Meaning that let's say that the U.S. dollar, let's say there's 100 million U.S. dollars floating around, and you double the adoption of dollars, and so either each dollar is worth twice as much, or the central bank prints $100 million and now there's $200 million in circulation and the dollars are worth the same. Right. And so with Bitcoin, obviously it's the former, right, where, it goes through the purchasing power of all the holders, and fiat is the latter. It concentrates to the money printer. Now, I don't know what we call that instead of the Cantillon effect we just call that deflation, right?
Right. Well, I think your point is good. What I was trying to get to was that what we can think of with what the Cantillon effect is. By the way, you're French, so is it Cantillon?
Cantillon.
Cantillon. Okay. Yeah, I'll try here. But So the Cantillon effect, it basically is taking the natural state of things is that these things go to the holders, and of course, like in a previously, I guess actually technically even today, you have new issuance going to the miners, and so they get sort of their benefits to it. Although we've described on previous episodes why the way that's done is quite fair and avoids like the seigniorage, but sort of in the natural state of the economy, it's effectively as the economy grows, it's the holders of the currency that benefit in purchasing power. But one way that you can think about the Cantillon effect is that it's effectively taking all of that benefit of a growing economy and specifying specifically who gets to acquire it. So instead of it going to everyone, I would basically flip it in a sense. The Cantillon effect is that taking from the sort of democratized state to specifying it into particular winners, right? Because they get to siphon off the growth of the economy, assuming they manage it well. If they manage it poorly, they end up just killing the cow that they're trying to milk. But if they sort of manage it well from like a long-term perspective, from their perspective, you're basically being able to take all of that growth and put it directly into the new units that you're printing so that you can make use of those in the economy. And I think that's that's an important way to understand what's going on with the Cantillon effect, is it's that siphoning off of wealth and redistributing it by means of money printing, because of the fact that money is a non-neutral good. And so not everyone benefits. That's, the helicopter Ben wanted us to believe maybe a little bit different, but when you print new money, the people who get those units are the ones who actually get to reap the rewards of what was redistributed by virtue of printing those new, like that dilution of printing.
That's right. The other part here that's interesting is that Daniel mentions that there's a relatively small group of people with the incentive to promote dollars as a payment system consisting of a government banking cartel. And I think that on one hand, it's a much smaller group than one would otherwise assume, just because the benefits of it are very narrow. It's almost like the benefits of it get dispersed through either the commercial banking system, where they're lending it out, and then the bankers are earning some kind of spread between the cost of money for them with the Federal Reserve and then the interest that they charge all of us, right? So they, let's say they borrow from the Fed at 4% and then they lend to us at 20% on our credit cards, and they earn the spread on that. Then it gets dispersed in the sense of it goes to the shareholders of the banks. And it's not like the bankers, when they look at it and they're looking at Bitcoin, lots of them ask the FDIC, hey, can we actually offer buy-sell Bitcoin to our clients? That way we can earn money from that. And so there's always this profit incentive that, to them, it's not either or. They're like, well, we'll continue doing the lending, but we can also add this other revenue source. And they don't really see it as cannibalizing, because in the first instance, it's not. Likewise, on the government side, they're like, oh, let's do a strategic Bitcoin reserve. This will give us NGU. They're not thinking about, okay, is this cannibalizing our money printer yet? Right? Because at the beginning, it really doesn't. In fact, it could help them. So I think that there's like a time element to it where in the short term, it's rational to adopt Bitcoin. And if everybody in the government and banks is thinking about the next quarter or the next election, then they're going to make the short-term decision, and they're not going to take the long-term ideological view of, oh, we have to defend chartalism and, we have to be principled and dogmatic and orthodox about it.
There's also a question of how much the sort of that ideological aspect of it, how much is understood in an explicit enough manner for them to take up the ideology. Because in order to have that strong feeling, you actually have to know what is the hand that feeds me. But if the hand that feeds you is sort of obfuscated by all of these different sort of channels of the Cantillon effect and kind of diluted through different organizations before you get your cut that's able to fund your thing, you might not really recognize that it's that specific money spigot that's allowing me to do what I want to do here. And so it's not as obvious. So they also, even people who benefit might not really even know that they're making like the short-term versus long-term decision. They're just looking at, okay, well, where can I get the goods? So it's like, if there's number go up to be found, it's like, well, that's beneficial.
Yeah, it's also interesting, like with the education system, they go out of their way to hide the fact that of the Cantillon effect. And so they don't want to talk about it. But that actually leads to a miseducation of their own elites, where now the elites don't understand the Cantillon effect and they don't defend it.
Right. Yeah, I think you're right that there's a lot of interesting alignment of incentives, and I would argue, number go up really is the thing. Even for banks, including like the government, banking cartels, they still have to be chasing after number go up. The Fed, they need to decide what to put on their balance sheets. Now, I don't know how much, they're currently thinking about, buying Bitcoin in particular, but it's like they have to like think about what's going on their balance sheet so they can stay solvent within their own game and continue. And I don't know. I mean, do you think that there's a way that they too would actually kind of just see the number go up and want a part of that?
Yeah, absolutely. I think that this is where it's kind of it's mind-boggling for us that we underestimated how strongly Bitcoin will succeed, to where, if our assumption was that Bitcoin would succeed such that banks and the government would essentially, be left out in the cold. But then in practice, Bitcoin succeeds more than that. And banks and governments adopt it, and it completely changes their incentives. It changes their behavior such that they're not bad anymore. Then Bitcoin has really succeeded beyond anybody's expectations.
I think another interesting thing about this is in comparison to something like gold, because we see right now gold has, last I heard, I don't really pay attention to the gold markets, but I heard it broke $3,000 for the first time. I know at some point a while back it was 2,000. So it's like, cool, you got a 50% return. There's always sort of talks of a sort of, BRICS gold-backed, currency competitor to the dollar and stuff like that. My understanding with gold, we're still waiting to find out what's actually in Fort Knox. But my understanding of gold is most of it is already sort of in the hands of central banks, and 50% returns is nice, I suppose, but that's got nothing on Bitcoin. So there is sort of, we could say like a game theory perspective. If you're chasing after, real purchasing power yield, gold is just, it's not actually that interesting. It's actually very, very boring in relation to Bitcoin. And, in many ways, I think this is part of why, especially with the younger generations, I don't really expect there to be much gold, among their portfolios. At this point, it really does seem to be, generally speaking, more of a boomer thing. And I mean that in a I don't even mean that pejoratively, like literally more of a boomer generation type investment. Whereas young people, we've got into an economic state where young people are chasing just absolutely crazy economic yields from all sorts of crazy things, whether it's, just trying to be an online influencer to make it big, trying to dump your, what little money you have into meme coins and crazy day trading and stuff. People people are in a sort of dire straits where you could say, a lower time preference thing is like, hey, you want to just like buy the gold, and these young people need to learn how to be low time preference. But all of those things that we would attribute to gold as a good low time preference thing, you can apply that just as well to Bitcoin. And Bitcoin actually has a serious upside to offer that I think as a millennial or Zoomer can come to understand. They see how it actually does get them potentially to a better economic state, and one that they actually were hoping for. They grew up thinking that was what they were going to get. Bitcoin as being the thing that could actually offer it. And it does so better than gold because it has more number go up. And on top of that, it appeals to all of their desires to have, more financial sovereignty and such after, growing up in a world where, unlike previous generations, there is not as much trust in the government in younger people today. So, you don't want to, you're not going to be as open to a lot of the options that exists. So Bitcoin just absolutely obliterates gold on all fronts, and in part because of literally just the compound rewards here of the fixed supply giving something that gold simply can't.
Yep, agree. When I hear gold surpassing $3,000, I'm like, wow, we did that a long time ago.
Yeah, their only sort of saving grace is that it happens when Bitcoin is going through a bit of a slump relative to its all-time high. So they think that it's a big dunk, but it's like, at any time, it's always possible that Bitcoin just, surpasses those gains, over the matter of a week. So.
Well, I mean, look, like they're at $3,000. We're at $87,000. It's like you look at the scoreboard. It's like, yeah, we can let you score some points. That's fine.
Yeah, I don't know what the numbers would be on like kind of market cap terms and such.
Yeah, but if you're let's say an investor chasing dollars, that doesn't matter to you. It's only the absolute return that matters.
Right. Yeah, actually, and do you see people? I'm genuinely curious. Are there gold bugs who actually think in terms of like how many ounces of gold do I have? Because a lot of Bitcoiners think in terms of like their absolute stack. The real number of units that they have. Whereas a lot of gold bugs that I know will often say that they have, about 5% of my portfolio is in gold, or, whatever that number might be as sort of that long-term inflation hedge. And if that's the case, then, what is that percent? That percent is implying that you're doing your mathematics based on the dollar. And so you're always you're still just stuck in the dollar framing, whereas Bitcoin also has actually allowed you to look beyond that and reframe things into a Bitcoin lens, which also you could say, Bitcoin's compound rewards are in purchasing power, and in dollars, it's more like the dollar is just a failing currency.
Correct. Yeah. So I've never heard any gold people say 1 ounce of gold equals 1 ounce of gold. And I think that, to the article's point, it's like, why are the gold bugs not more motivated to promote gold? Some of them are. I'll give some respect to those who are. But it seems to me that because of gold's lack of a difficulty adjustment, lack of a halving, if you're shilling gold, all you're doing is basically shilling gold miners, right? That you're just saying like you want to give more money to the gold mining industry because that's what's going to happen. Your gold is going to get demonetized by people digging up gold in South Africa and then shipping it to you. So I think that this article also gets to the point of the scarcity of Bitcoin relative to gold.
Yeah, it's almost like gold is sort of lacking a thumos, because at most it's like, oh, well, it's like this inflation hedge, and it would be nice to be on a gold standard. there's not really a lot of excitement around what gold can market. So it sort of lacks the thumos. Whereas with Bitcoin, even when we have volatility, Michael Saylor reminds us that volatility is life when it comes to an asset, growing. And so it sort of inherently has thumos, and the number go up and the drama around the actual path up, it gives thumos, and it gives something to be excited for. It gives a future to be excited for, such that all of the properties of it, you can actually have a better sense of like, what can that truly mean in the future? It's like, well, if there's more purchasing power in Bitcoin, you've been saving in Bitcoin, et cetera, these things start to mean even more. And so, this is also, I guess you were saying, we get accused of just pumping our own bags, but, as number go up begets number go up. And, as number goes up, as we were saying, Bitcoin is literally more useful. And so, of course, we're going to pump it more because now it's even better. So it's like there's even more reason to get excited than previously.
Yep, I agree.
So I think, to round that sort of thing off is just like number go up is the most socially scalable meme and the thing that brings everything together. And it is great how it effectively, feeds into our greed, just kind of our natural desire to have more material wealth, although it's, of course, especially funny since Bitcoin itself is dematerialized. But, material wealth, even in terms of, financial security and just, having less uncertainty about our economic future, it's able to feed into that while, effectively creating what gets mistaken as a Ponzi scheme because of the fact that it's sort of benefiting all the participants. So, another thing is, he says that, with Ponzi's, somewhat the early adopters cash out, and there's like losers. The cool thing with Bitcoin is like there isn't a loser, just like everyone just wins. You get into Bitcoin and then you're winning. And as far as late adopters, they don't get dumped on. It's just that they don't win to the same degree, in terms of the growth in their purchasing power. But then they still get to be part of the winning game anyway, because their purchasing power will continue to grow.
I agree. Yeah. Yeah. Team Bitcoin is always winning.
It's always winning. And we're always recruiting new people who come in and spread the memes, spread the knowledge. Something else I wanted to talk about with regards to Bitcoin's compound rewards is you've been thinking a lot about Bitcoin financialization and how Bitcoin, DeFi is this distraction, which we've known for a long time, but you're now pointing much more to how Bitcoin is eating up TradFi, and that's the real potential with regards to kind of eating up the financial system, is not creating this like decentralized financial thing, but actually just sort of restructuring the existing TradFi world onto a Bitcoin standard. And
the high returns, the high compound rewards, Bitcoin, hand in hand mechanically causes high volatility. And so it's kind of, that's throughout Bitcoin's history, people have complained about Bitcoin's volatility is too great. And I used to think like, okay, well, long term, the volatility is going to go down, which also means, frankly, long term, the returns are going to go down. And so those people will be onboarded later on, and that's fine. Like Bitcoin will meet you where you're at later on. And then so that's kind of the people who are too risk averse to adopt Bitcoin. And then you go towards more the middle, and then that's where us, people who accept the risk return profile of spot Bitcoin and say, hey, look, like you just hold it for the long term of greater than 5 years and you'll come out ahead and it's not a big deal. And then you go further out on the risk spectrum, and you have people who want to try to outperform Bitcoin, and they've got all sorts of different techniques that they try. One is to just like day trade. Another is to day trade with leverage. They go 100x long on BitMax. They'll trade altcoins and try to outperform Bitcoin doing that. They'll try to do like VC investments or Bitcoin mining to try to outperform. So they've got all sorts of like theories on how they can go about doing this. So the question then is there a way to bridge the gap? And meaning that if we want to accelerate Bitcoin adoption beyond just that middle ground, the people who are Zen and are, one Bitcoin equals one Bitcoin, and they're, stacking sats and staying humble. What does it look like to try to expand Bitcoin's appeal to the either side? One approach is to like browbeat them. And so my favorite metaphor is like, if you think Bitcoin's too volatile, that's like looking at the branches of a tree swaying in the wind. And what you really need to be looking at is the fundamentals of the system, the roots of the tree that are holding it in place, providing the stability. And so, we can talk about the decentralization and all that. That's persuasive for some people. But I think that for the mainstream, what we're going to see is that as Bitcoin takes over the financial system, Bitcoin's going to insert itself into different parts of let's say, the bond market for those who are risk averse, or the equity market for those who are risk seeking and are trying to outperform Bitcoin. So that's where, like, if we look at whether it's what Strategy and Sailor are doing, or what GameStop will hopefully be doing, or MetaPlanet in Japan, they're huge in Japan. All these different approaches to try to crack up and separate the risk return Bitcoin profile so that the people who are on either side of the risk spectrum are also able to adopt Bitcoin as an underlying asset, even though they're like mentally incompatible with the raw spot Bitcoin return. So that's kind of, like thinking about if hyper Bitcoinization is going to happen, does it happen through the way it has been happening? People, running their own node, stacking sats on their cold card, although more realistically, they're just using Coinbase and leaving their Bitcoin at Coinbase. Or are there going to be more and more products built on top of Bitcoin that are using Bitcoin as collateral? And so it's another case of like Bitcoin succeeding far more than we expected it to. In my article, Speculative Attack, which we'll get around to reading, I posited that people are going to leverage up to buy Bitcoin, but I never really expected them to leverage up against Bitcoin. I thought that they would leverage up against like real estate or their business and borrow, against that kind of collateral, traditional collateral, and not so much borrowing against their own Bitcoin. And so, maybe it was a lack of imagination on my part, but really it's just that Bitcoin has succeeded in becoming such a like well-known asset, and it's a superior asset to all these other forms of collateral. So it logically does make sense that this is how it's playing out. So yeah, that's kind of what I've been thinking about lately.
For those who are, like you said, like they're using Bitcoin as collateral instead of, say, like their house or whatever. Why do you think that turned out to be for them a good choice? Like, obviously you're saying that there's like a strong brand or whatever, but that's the actual financial returns and stuff don't really like care about that per se.
Right. Well, it has to do with the spread between how much are they paying to borrow dollars. So let's say they're paying like 15%. And then what's the compound reward for Bitcoin, right? What's the growth rate for Bitcoin? If it's greater than 15%, then the borrower actually makes money off the fact that he borrowed Bitcoin against his Bitcoin. He borrowed dollars. And so the huge caveat here is what's the risk, right? So a lot of these products have really onerous risk on the borrower, where if the Bitcoin price goes down, then they get liquidated. And so then they don't have any Bitcoin left. So that's one risk. The other one is, what is the term of the loan? So this is why I highlight what Saylor's doing with strategy with the convertible bonds. He's doing it where he doesn't have the liquidation risk. So you have people on social media who are like, oh, what happens if the Bitcoin price goes down? What will Saylor do? It's like, well, he'll be fine because they can't liquidate his Bitcoins based on the convertible bonds. The other part of it is the term. So it's not like he's borrowing day to day or hour to hour, which is literally what you're doing if you go margin along on a crypto exchange, that you've got a minute by minute term. You're not really you're not borrowing long term. Saylor is borrowing long term. So this debt is due. I think some of it is in the 2030s. It's like Bitcoin has plenty of time to grow between now and then, and so I think that's where it's really, it's easy to say, oh, you can amplify your returns by going leverage long. But if you're doing it in a really reckless way, then you're going to get wrecked and you're going to have a bad outcome. So that's where I'm like, I don't think I think most people are just much better off holding spot Bitcoin and staying in the middle, right, of accepting the risk return profile of spot Bitcoin and just having a long-term view of it. It's really about expanding the base, finding other investors who they've already rejected the idea of holding spot Bitcoin for whatever reason. Usually it's kind of a psychological thing of they can't handle the thought of losing money, and so they need a wrapper around it that helps them think that, oh, okay, well, I'm holding a bond, and so it's much safer. Or you've got the people who are just wanting to go leverage long Bitcoin on the other end. So
this is something that's funny with the normie markets, the stonks. The stock market will go down a few percentage points, and everyone will be freaking out like blood in the streets. And I go and look, and it's like, oh, you had 3% downward move or something. And it's just funny because Bitcoin has trained me so much to expect those sorts of things. I mean, that the 3% that happens day to day. That could happen multiple times a day. It's just that's just a part of life in Bitcoin. So if you've been in a market for many, many years, and you think, 3%, that's a tough one to swallow. You probably are going to need some help getting into Bitcoin. You're not gonna walk into a gym and just immediately start deadlifting many plates. You're gonna have to work up your ability to handle that risk, I suppose.
Yep.
So, I think that's an incredible thing about the sort of financialization, is just recognizing that, obviously there are there are premiums, you could say, or maybe a different word, but it's there are specific risks that you also take on just by, being involved in one of these vehicles. Saylor himself has done a great job of talking about, what are the problems with equities and holding equities. And there's all the risks of companies dealing with political risks and, supply chain risks and, what happens when, a CEO dies and, they don't know what to do at that moment. And so on and so forth. It's just all these possible things that put equities in a tough bind that, most people, a lot of people are doing index funds and such, which is helping to kind of, balance between all these different possibilities. But there are risks to doing this relative to spot Bitcoin as well, because spot Bitcoin has no counterparty risk. You can run your own node, you can hold your own keys, you can watch the coins, and they just sit there. But if you have these other desires, and there's nothing morally better or worse about a particular time preference, for instance. There might be very good reasons for someone to want a shorter return of some kind or a more long-term return of some kind, but with a different risk profile and so on. But when you're able to join a sort of, basically a corporate vehicle, corporate in this sense, just people collectively, kind of working with a Bitcoin stash to offer Bitcoin at different, I think sailors use the analogy frequencies. You have like the very low frequencies of, the people who just own the land of Manhattan. Then you have, the people who own the buildings on top of that land. And you have the people who own a business or a condo inside of that building and so on and so forth. These are people who are all getting to benefit off of that area, but able to do so in a different way. And, a lot of people also just they have different reasons that they need to get into that. And so I do agree, most people should be just thinking about why spot Bitcoin is also what's able to power all of these other things. None of these other things would be able to exist in Bitcoin without the fact that Bitcoin is what it is. And so people should be mostly focused, their education on understanding spot Bitcoin. But this financialization does allow people to get exposure to compound rewards from Bitcoin in a way that suits their particular needs, like you said, where they are now, and over time they can experience those risks, the ups and downs, and settle on the right long-term plan for themselves, which I would imagine would tend towards a lot of spot Bitcoin.
Yeah. I was just gonna say that, like, I hear Bitcoiners express concern about basically like paper Bitcoin is how they'll put it, or that it's bad because it's going to cause like a 6102 because these vehicles centralize Bitcoin custody to regulated entities. So on the paper Bitcoin, if anybody tries to do this without actually having spot Bitcoin be the asset that is backing the liabilities and the equity, they will blow up. And we've seen it. We saw it with Mt. Gox. We saw it with FTX, Celsius, BlockFi, etc. If they don't do this correctly, they will blow up. And Bitcoin will be completely unaffected by this. So, the people who get involved, they will be affected by it. So I do think that, if you're not happy with spot Bitcoin and you're not happy with your running your own node and holding in your cold card, and you want to go invest in Bitcoin backed securities, that's on you to do your due diligence, because they're not all the same. And that's frankly one of the reasons why you should maybe not be investing in Bitcoin backed securities, because it takes time to do due diligence on these things. And obviously we talk about how annoying that is, and that lots of people don't want to do that. They just want to hold money. So there you go, just hold Bitcoin. But they worry that, even if I'm just holding Bitcoin, if everybody's doing these Bitcoin-backed securities, then it's dilutive on me because of the paper Bitcoin. And I just don't think so. I think that if anybody tries those shenanigans, sure, you might think that there's some kind of short-term dilutive cost on you. But if you're in Bitcoin long-term, you have to know that they're going to blow up, and that if they're actually doing kind of fractional reserve version of Bitcoinization of finance, they're going to blow up. And who's going to come out ahead? You are. Okay, so there's no really real reason to be concerned about it. On the 6102, I do think there's reason to be concerned. So first of all, I don't think that the Bitcoinization of finance is going to further centralize custody more than it already was. Even before all of, MicroStrategy and all this, all the ETFs, Bitcoin was concentrated at Coinbase. Coinbase is already holding, I think it's 10% of the Bitcoin supply. And then before Coinbase, obviously, Mt. Gox was holding a significant percentage of the Bitcoin supply. So there's always been this kind of, maybe it's a power law distribution of a custody of Bitcoin, where there's a small set that is holding a lot of Bitcoin and then a very long tail of small holders. Now, on the government side, something that, I saw a riot with the big Bitcoin miners. That means that the big custodians of Bitcoin, they have the resources to fight the government and to essentially, co-opt the government, let's say. And so I think that's actually, they are providing a shield for the long tail because they're able to pay for the lobbyists who are going to protect Bitcoin custody for everyone. And the cynics might say, oh, well, look, the big guys, they're going to try to get rid of self-custody for the little guys. I'm sorry, but over and over, I've seen the diametric opposite. I've seen them go to bat for self-custody out of principle, not even, but it kind of is in their business interest to protect self-custody for everyone, because otherwise there's not going to be any Bitcoin adoption. And then there's Coinbase's prospects go to zero in that scenario. So yeah, those are some thoughts around kind of the concern trolling I hear from Bitcoiners.
I mean, we also might see over time, more companies, start to adopt, treasury strategies, but also as corporate key management solutions improve, they themselves can do much more hodling for themselves, self-custody for the corporation, in which case, those corporations themselves need to make sure that they want to know their money is secure as well. Another thing with the paper Bitcoin is that, you also as an employee receiving a paycheck or a merchant receiving payment for goods, you don't have to accept strategy equities as payment. You can accept nothing but, cold hard sats through Bitcoin and Lightning. And so, you are never going to be diluted in a sense of the fixed supply of Bitcoin is getting changed by these things. What you're getting diluted, so-called, is because there are some people who are being misled by someone else. But the fallout from that, it doesn't affect your stash, except, maybe some short-term volatility, which is already just a part of Bitcoin. So I don't worry about that. Another thing that I hear is, and it kind of relates to just, broadly the whole number go up thing. People get really dismayed by a focus on number go up, especially when it's, coming in the form of these financial vehicles and such. And there's an attitude that Bitcoin is just going to be a mere stock ticker, sort of reducing Bitcoin to just a stock ticker because people just want it to hold for the future. But I think first, that was always what people mostly wanted it for, is to hold it for the future. And, payment sides of things will continue to increase over time, as they have already, because, people want to make use of the purchasing power that they have reaped from holding Bitcoin. And additionally, Bitcoin is... It's silly to just even call it just a stock, because it is not. I don't know if people who are, self-custodying their Apple equity and running full nodes that can, check, the assets and liabilities of Apple to make sure that everything is exactly what you think every 10 minutes. And there's no one telling Tim Cook, hey, don't have more than 21 million units of Apple equity and never dilute it more and, release it on a very particular supply schedule and so on and so forth. And so there's not a peer-to-peer Apple stock. And even if you had sort of some of these envisioned sort of blockchain-based, so to speak, ways of trading equities through various token mechanisms. People talk about tokenization. And there's certain ways that, within a good Postgres database. You could have interesting cryptographic primitives that could help with the process of trading these things, I'm sure. But no matter what, you're still going to have a central issuer of Apple stock, and that's the Apple Corporation, whereas Bitcoin does not have that. And so yes, maybe for people's individual exposure to Bitcoin, they kind of just they put it in a similar bucket to their Apple equity. It's like, oh, I have my Apple stock, I have my, this or that bond, and then over here is Bitcoin, and so on and so forth. And they think about it like that, as opposed to, the money sitting in their wallet, their credit card or something. They're still using Bitcoin in sort of the way it's intended. It's just kind of through this funny lens. And so I just think it's a misguided apprehension about Bitcoin, because Bitcoin by its very nature it's not a stock ticker. And as far as like there is a quote stock ticker, I guess there really are stock tickers that are related to these financialized vehicles for Bitcoin. The attitude towards it, the actual like functioning of the whole thing is based off Bitcoin, a money, rather than, the selling, computers and such. Do you have anything to add to that? Maybe even, you might not even agree with everything I said, but,
well, I mean, I think that there's also just the argument of liquidity, right? By its nature, Bitcoin will always be bigger than any one company that is adopting a Bitcoin treasury standard. And so or even a government doing so. As Larry Fink put it, Bitcoin's above governments. So from a liquidity perspective, Bitcoin's always going to be more liquid than any of the securities that are backed by Bitcoin. And that's just, indicative that it's going to continue to be the premier monetary asset, and that we don't have anything to fear about essentially having fiduciary media that is eclipsing Bitcoin in that regard. There's no economic reason. If we look at fiduciary media for gold, it was because gold was so heavy and expensive to transport and expensive to verify too. So, Bitcoin teleports magically. It's magic internet money. So I don't think that the fiduciary media concern exists here.
Yeah. Last thing I want to get into, we mentioned GameStop at the beginning, and it's come up a bit. And I've seen concerns that people have about zombie companies getting into Bitcoin. So basically companies that are kind of not really doing much of anything anymore. So there's not really a lot of life in them as a company. And it's like, well, what do we do with this melting ice cube? And then they get on a Bitcoin standard and start operating that way. And they have an attitude that it's like, well, it would be much bigger if we had, Meta or Google or, a very large company that's pulling in, lots of revenue and such. It would be much better for Bitcoin if those companies were doing it rather than the zombie companies. And to me, I just don't see it this way. The reason it's a zombie company is that, they're just like, they're floating along, and Bitcoin is actually it's bringing them back to life. So, if they're basically stuck in a position where they just don't really actually have much economically to offer anymore, Bitcoin's the solution. In fact, like as far as Bitcoin's compound rewards, it's way better than most of the business opportunities those people could be doing anyway. And you actually have to wonder, as far as Meta or one of these other companies, if they got on a Bitcoin standard, how much of their company might they start finding themselves liquidating? We see this on a personal level, like an individual level of, the classic joke, but it's not really a joke, but it is a joke, but not, of selling chairs. As an individual gets into Bitcoin, they look around at their life and they realize, there's stuff. There's just like there's a bunch of junk around, and I don't want it anymore. It is not as valuable to me as the rewards that I can get from just sitting on Bitcoin. And so it's actually like a good thing, I see, being able to liquidate this and sort of, like he's saying at the end of this article, of, Bitcoin is cashing out. So when a zombie company is getting into Bitcoin, it's like, okay, like we ran into a dead end in the economy. just like as a business selling goods and services. So what can we do? Let's take our chips off the table. Let's go cash it into Bitcoin, and let's work with that as and see where the rewards go. And we see with Strategy, they were not like, the biggest and greatest company. And yet, we see what they've been able to do in terms of growth for the company. And likewise, just, how much more they're offering in the economy now that they've become this, big treasury corporation. To me, it's bringing the zombies back to life. And as far as any of these other, like if it was a non-zombie company getting into Bitcoin, I think they would start, they would finally bring in, an arborist to help clear out, the dead branches and do some gardening to get rid of things that are not actually pushing the bottom line. Because you also now, when you're on a Bitcoin standard, you're suddenly not just trying to chase Bitcoin inflation. Dollar inflation. You have to keep up with Bitcoin itself. And it turns out that a lot of our economy just, there's a lot of cruft in the economy. And I think it's good for any of the cruft, whether it's GameStop or whether it's, a bunch of, commercial real estate owned by a FANG corporation. I like seeing that cruft kind of get cleared out and Bitcoin as this exit ramp that people can take to get onto something new so they can start thinking about a much different future.
Yeah, I also think that there's this concept of the innovator's dilemma. If your company is doing well enough, then you get stuck on a local maximum. And you are risk averse, so you don't explore for the global optimal solution for your balance sheet. And so that's, I think, it causes a desperation, but it's also just like Bitcoin is for, how to put it, it's like the store of value of last resort that turns out to be the best performing.
Right. Yeah. People don't, it's not first in mind for most people. And yet it does so much better than, whatever business they were doing previously. And, you look at the stocks like we were saying with gold. I mean, the same thing. You look at the S&P 500 and how it's done, and people will talk about, how well they've done in the S&P 500. And it's nothing compared to what Bitcoin has done. And likewise, this is why Strategy has been, basically, one of the fastest growing equities. I don't remember how they compare to NVIDIA on which timelines, but they've certainly outperformed NVIDIA on certain timelines. And I know Metaplanet has been just dominating the Japanese stock market. So just in terms of actually delivering shareholder value, it's quite clear that it's like, well, worrying about whether it's a zombie company or not, it's like the point of the company is, delivering shareholder value. And who is the one that's accomplishing that? And it seems to be the ones who are adopting Bitcoin. And they were drawn into Bitcoin by number go up.
Yep, that's right.
So number go up. I view number go up as nature healing. And it really is just an incredible force that brings everyone in, and will lead to the economic dreams that we have for the future. Do you have anything more to add?
No, I think that leaves it on a really great note.
Wonderful. Well, I look forward to our next discussion as we continue through the S&I mempool. Anyway, thank you for listening to The Reorg. This podcast is brought to you by the Satoshi Nakamoto Institute, dedicated to advancing and preserving Bitcoin knowledge. Our mission is to deepen understanding and appreciation of Bitcoin, not just for today, but for generations to come, by creating enduring educational resources and generational knowledge for generational wealth. If you enjoyed the show, please support our work by sharing links, deepening your own Bitcoin knowledge by exploring and studying the S&I archives, and contributing sats. As a 501c3 nonprofit, we rely entirely on supporters like you. Whether you can give a few Satoshis or a few thousand Bitcoins, your contributions enable us to continue educating current and future Bitcoiners worldwide.